Okay.
So, hey, this is Brendan Beatty with Homestead Mortgage. This is the first, what I hope to be a pretty fun series of videos that we're going to do, interviews and other topics about the mortgage industry, particularly in this time we're in right now with the Corona crisis and the different paths and obstacles and challenges and successes that we're going to see come out of it. But fortunately today, I'm very happy to have my dad joining me. He's the managing partner of Homestead Mortgage. He started this whole game. Between him and I, we have about 40 years experience in the real estate business. Certainly all of my life, he's been involved in it. No, we're going to talk about some of the things that are challenging us now. We're pretty excited. We just came off a great conversation with some industry leaders, with the CEO of United Wholesale Mortgage, as well as MBS Highway, some pretty intelligent people talking about what's going on now and what's going to go on in the future. Hey, Dad, how are you?
I'm excellent. How are you doing, Brendan?
I'm phenomenal. I'm happy to be doing
this.
Good.
Yeah, that was a great webinar or question and answer session they were on. And again, like you said, two great leaders, Matt Ishbia, Barry Habib, and it was moderated by Anthony Casa. But they had a lot of good information about what they expect for the future. And the real plus that I got out of that was the future is really, really good. It's really promising. Get through this time we're in right now, which is a little bit ugly, but get out of this. They're looking at what they believe to be some of the best days ahead for housing and mortgage industry.
Yeah, that was a big takeaway for me too. A lot of talk started with forbearances. I guess that's some of the information you and I wanted to get out today and talk about how those are affecting consumers today, how those are affecting the mortgage industry today, and how that could affect both going forward and what's going on to get in the way. So I guess for those who haven't read the news, forbearances are a common topic right now. A forbearance is when your lender agrees, and again, that's the key word there, is you have to ask for it, they have to agree for it, and grant you a temporary stoppage in payments on any loan, installment loan, whether that's student loans or car loans, or in this case, mortgages. And those have always existed. This isn't a new tool that has come up in the repayment of mortgages. Forbearance has always existed. The big change is that the federal government has allowed anyone to apply for one, and without cause on a government-backed loan will be granted this forbearance to give relief to the consumers who may be struggling to make their payments. What was the particular language that you read in the stimulus package there that changed the industry as we went?
Well, yeah, the big thing, you said it, was that there's no means test in the current language. It's just, hey, I don't want to make my mortgage payments. The story we just listened to was a couple of people that took out $150,000 cash out refinance on their properties. So they pocketed $150,000, and after the refinance, and they didn't lose their jobs, just continue to make $200,000+ a year, and just said, hey, great, I'm just going to take advantage of this. I'm not going to make a payment for you. And that was the not well thought out, I guess, part of that stimulus package to enable that to happen. So there are people that are trying to game the system. And I think an important note for any consumer who's thinking of doing it is the big difference between deferment and forbearance. And you mentioned the student loans, Brendan, and this whole package too. They deferred student loans until September of 2020. Is that right?
Yes, actually, I'm a lucky student loan payer
recipient.
And for them, actually, it was a different thing. They didn't even ask for applications. They sent anyone handled by Navient or Department of Ed, I believe, was sent a blanket email saying your loan is deferred, the interest is suspended. Even if you're on automatic repayment plan, those payment plans were put on hold, so you didn't have to act upon anything. They just granted that. Which student loans is a whole other topic that is a big crisis as well. But that was some fortunate relief. And those were deferred, and there's no penalty for that. I'm not gonna lose interest. I'm not gonna lose money because of that time. And if I can continue to make my payments, I'll just be attacking principal.
Yep. But on forbearance with the mortgage, it's a very different story. Meaning your interest is still going to continue to accrue. You still owe that money. It's not like, hey, just pause, don't make the payments, we'll just start up again and you'll be fine. Those payments, the interest is going to accrue. And let's say you're unfortunate enough that you get into trouble next year, you take the 12 months, and next year, hey, you're still kind of struggling. And let's say you had a 95% loan to value property, you put down 5% when you bought it. Let's use $200,000 for a loan amount. So your payments maybe were somewhere around $1,500 a month, right?
Sure.
So 12 months later, you get $18,000 that you haven't paid in that. And let's say you put 5% down on the property. So that was, 10 grand you put down up front. So, at the moment you had $10,000 in equity in the property. Now you don't make your payments for that period of time. And let's say next you say, look, man, I got to sell the house because things just, it hasn't worked out great. I need to move. Or my job gets relocated. I mean, you're $18,000 upside down on that house. You pay your real estate commission, that's your 5% you put down, right? The 18 grand is up, but you're upside down. There's no guarantee they're going to grant short sales to you. So you're going to stroke a check for that $18,000 if you want to move.
Or
And the other one he brought up that I thought was or have to move, correct. The other one he brought up that was a really good point is I think we're going to head into, and we've been saying it for a little bit, within our company, but, somewhere nearing the end of this year into next year, we're going to see some of the best interest rate environments we've seen. I mean, the predictions are, we might very well be seeing rates starting with a 2 instead of a 3 on rates. And, you'd love to be able to take advantage of that. Pretty certain if you took it forbearance, you're not going to qualify for those loans. They just, yes, it doesn't hit your credit score. They can't say it is late, but forbearance is going to be given another major event in your credit life that is going to impact your ability to get your next mortgage.
Other major events for those who are unfamiliar with underwriting and credit reports would be things like short sales or foreclosures or bankruptcies. And if those events have happened in your past, it doesn't mean you can never get a mortgage again. But there are certain timelines we have to get through before we can say, yeah, well, you're a strong borrower again. We can give you a mortgage, or even partially more important, give you a mortgage with a really good program without having to jump through particular niches that certain programs may allow leniency on those things, but they may not be the most advantageous. And no, that's the other takeaway we saw is that sometime in the next 12 months, certainly stability starts coming back. The unemployment rate stops increasing so aggressively, and some stability returns to the market. There's going to be a need to lend, I should say, at lower interest rates. There's going to be a need to get that money onto the market due to the rest of the debt that we've incurred throughout this time.
Another one I just want to bring up is the debt that the government's incurred with all of these stimulus packages. The good news, obviously that's not great, but the good news within that is I think we're probably looking at a reasonably low interest rate environment for some time to come, as whenever the government has huge debts, which they do have, that is going to maintain a low interest rates for quite a while. I think we're looking at several years of very attractive rates.
Right. No, and all of that. I'm on the front lines with talking to consumers about what they should be doing to buy a house. That's what my job was 2 months ago. That's what my job is this month. That's what my job will be tomorrow. How do we get yourself in a position to buy a home, or if you want to refinance or improve your scenario, how to get yourself in the best position? And a lot of that has changed, actually, and the advice I'm giving has changed because some of the guidelines we're seeing have changed. We're seeing a lot of lower credit scores be tougher to get. If there's a lender doing a 580 credit score loan, which again 2 months ago I could pre-approve without batting an eye, and I would have 4 or 5 lenders to offer that to. I don't have that options anymore. I don't have those options anymore. I may have 1 or 2, but they become incredibly expensive if doable. So it still comes to getting yourself in the best position to buy going forward. And again, if you're in a position to evaluate the forbearance need on this, I do believe maintaining your credit as immaculately as possible is going to be a big advantage going forward. And I think that includes doing whatever you can to keep your mortgage payment going regularly, which keeps the credit reporting and underwriting guidelines in your favor, as well as keeping that equity in your pocket should you need to use it for some reason in the future.
Yeah. And I think another takeaway from that, what we just listened to, but we've always kind of felt this way anyway, is that, look, it's not, we make money by doing loans, right? We get paid if we close loans for you. Our mindset, however, really isn't, hey, let's find a way to get you into the loan today. It's really, hey, how do we get you the best loan for you? Maybe that's 2 months out. I mean, maybe it's wait 2 months, 3 months to get yourself in a great position if you can do that. And that might be the best course of action. We don't want to push you into doing something when, hey, look, things are going to improve. Things are going to get better, a couple of months down the road. Your situation might improve a couple of months down the road. Let's take the time, do the things you need to do with your credit or with your income or your assets to put you in that right position.
Mm-hmm. Yeah, and those conversations are still happening today. So some of the, the bright news in the today and the future is, there's still a lot of buyers coming. We're still getting phone calls, we're still getting applications. That means there's a need for property, and right now that inventory is a little low, for obviously all the known reasons. And there's some hesitation in the market to show and inspect, and not all of it. There's a lot of houses still being sold today. There's a lot of closings still happening. People are going through great lengths, and we'll bring some of those people into some of these future conversations about the lengths and what's going on day to day here during the COVID crisis. But it is still happening, and there are a lot of people getting themselves in that position. So, they were saying on that call today that whether it's, next quarter and fourth quarter, or fourth quarter and first quarter 21, that we're going to see some really high volume times in both the real estate and the mortgage industry very, very soon, with this pent up demand and opportunities that are going to exist in finance.
Yep. No, overall, the long-term outlook is very, very positive. And I say long-term, medium term, just get through this blip that we're in at the moment, which is really just
Right. It's been 5 weeks. I did the math, 5.5 weeks, depending on when you started your lockdown here in Massachusetts. At least was more or less St. Patrick's Day. We still have a little bit ahead of us to struggle through and get back to normal. But no, I guess some good news, some hopefully some important news to those listening and giving us your time. I appreciate it. If there's anything you want to hear about, reach out to me, reach out to Homestead, reach out to your loan officers, and ask them these questions about what's going on and what you should be doing to prepare yourself. Again, if it's not today, if it's next year, if it's, whatever, 2 months, 6 months, even 24 months from now, you can still make the right choices today to get prepared and have the right conversations and use this time to your advantage if you can. So,
Yeah.
Dad, thank you for the conversation. Look forward to having you again soon. I know we talk pretty much every day anyway, but we'll record a few of them and share them as needed or as wanted, I guess.
Look forward to seeing you again in person one of these days.
Eventually, we'll be able to have a beer together as opposed to virtually. But maybe we'll do a virtual one and real soon too.
All right. Sounds good.
All right.
Thanks,
Love
buddy.
you, Dad. We'll talk soon.
Love you.
Bye.